there's very few high growth companies in the public markets because all that growth has been annexed by the private markets as a bizarre outcome of, ill-informed regulation. So all the wealth creation is taking place in the private and the private side. If all those companies were to go public, as you say, if the Canvas of this world, if the database company to go out, it's not clear to me that they'd get that 3x pop. Instead, you might what have is, okay, they'd probably trade at their very high, quite deserved values, but I think the scarcity premium would go out of it. Right. For example, I can't remember. It's been 2 weeks now. Like, Figma at a Canva equivalent where Figma priced at 15x forward. Yeah, sure. A Canva equivalent and a Databricks equivalent then popping 3x, probably not. Because at some point, they would all be just wonderful public companies trading at appropriate growth adjusted multiples. But what it really would be is taking $1 trillion off the private balance sheet and putting $1 trillion onto the public balance sheet where it could easily digest it. Because, US stock markets are, 40, 50 billion. So another trillion, 50 trillion, it can digest another trillion. So you could shove off onto the public markets an amount of equity that at appropriate multiples would, as you say, Jason, lead to a huge amount of LP capital return and be totally digestible by the public markets, probably without the 40 super premiums. Just, it would be the return of high growth companies in the public markets.
Let's look at, so Snowflake, Databricks growing twice as fast as Snowflake at the same AR, which is stunning. Figma growing 48% at $1 billion.
Yep.
Pretty crazy.
Yeah.
Worth 40x ARR today. It could change. I mean, it's frothy, right? But if Canva IPOs next year at $4 billion instead of $1 billion, growing 40%, and Figma's at 48%, I mean, that's a much better. Figma's one for the ages, but that's an even better company, isn't it, Rory? If it's growing 40% at $4 billion, I mean, it could be a jaw dropper if multiples and market dynamics are consistent with today.
Yes, again, as I say, and it would trade like a wonderful 40% growth. Look, the absolute number would be bigger. The multiple would be growth adjusted. As I say, my comment is merely the speculative. The speculative side of it that took it, from the IPO valuation, probably would not be there as more stocks come out. But it's still, look, it would be the aha here at the high end of the private market. There's a significant absolute sum locked up in private markets that at some point is going to seek a public market where a number of them will be worth 50 billion, which is unprecedented. A few will be worth 100 billion. And maybe one will be worth $1 trillion in the private markets. And your little head would hurt. Because I remember, it's only 2018 that Apple, if you think about this, is a weird comment. It was only 2018 or 19 that Apple touched $1 trillion in the public markets. And 7 years later, there arguably, I'm not sure I buy it, it might be one or two private companies that touch $1 trillion in the private markets. That's just bizarre.
I go back to this, and I've said it so many times, and I've said it in this show so many times, but David from VanCap, who said that the biggest mistake we make is that we look at today's fund sizes and today's outcome sizes and think that is what it will be in 10 years' time. We should be looking at the outcome sizes of 10 years' time and thinking of these fund sizes rightly correlated for those. I always think back to that, because if you were to do that, you might actually have a more reasonable or nuanced mindset towards the fund sizes we're seeing today.
Yes, you do make that point very consistently.